Hey everyone, it's Mondays with Michael. Greg just gave me that moniker, so I stole it, frankly. We start our expert series, and of course, we start off strong with Greg Dickerson. How you doing, Greg?
Doing good, Michael. Yeah, I was thinking about it this morning. I'm like, it's Mondays with Michael. That's awesome.
I think that's great. I hopefully I know the fans are tuning in. You get a lot of requests. I don't know if you actually take the time to look at the comments, but you are a fan favorite. So thank you so much.
Yeah, thank you. Yeah, I do read the comments, but I don't respond because it's your channel and I want to respect that. So for everybody watching, I do see your comments and I appreciate the feedback. Whether you agree or disagree,
Yeah.
we're here to talk and debate and discuss. And the big thing is I think a lot of people don't hear or don't watch the whole thing sometimes, and they'll think we said one thing and
Yeah.
there's another, like the housing market discussion we had.
Yeah.
We were talking about, can the housing market tank 50% in 1 year?
Right.
And that's just not possible. Well, I mean, anything's possible, but that just doesn't line up.
No.
And you can't show any evidence why that could happen. So you got to understand what we're discussing and kind of really listen to the concepts and not misunderstand what we're saying sometimes.
Yeah, I think we're going to get into that conversation because you're right. We got some pushback. And again, I'll just say it clearly. Single family homes in the United States cannot fall 50% in a calendar year. It just can't.
Now I don't think you can find anybody that's going to agree with that. And I think even Ken McElroy with he didn't say, it's kind of hard to interpret exactly what he is saying.
Yeah.
So the question is, can there be a housing market crash? What does that mean? Can house prices come down? Absolutely. Will they come down?
Mm-hmm.
Probably, because they go up and down. Like right now, we're still below 2017 levels when you look at the median household average nationally. And again, we were talking about national home prices coming down 50% in a year. That, maybe some pockets you might see that,
sure.
but I don't know where. In certain neighborhoods for apartments in New York, you might be seeing that.
Yep.
But nationally, that's just not really what we're seeing in terms of any indications out there right now. And, one of the comments was, you and I are saying real estate prices will never go down. We never said that.
Never said
that.
In
fact, we say the opposite. Real estate is up and down.
Exactly.
It always has been. Now, historically, it's gone up. But right now, at this point in time, the national average, we're still below 2017.
Mm-hmm.
So we haven't gotten back to where a peak was in 2017. The Fed started jacking rates up. And what happened? If you guys remember, fall and summer of 2017, 2018, we saw it fell off the cliff.
It did.
And that's when prices started coming down a little bit. So interest rates is what's driving housing. You said it in one of your videos that people are buying payments, not price. And again, people have to qualify now. So how do you have a bubble? Let's just say, what's a bubble?
Yeah.
A bubble is an unsustainable exponential increase in the value of an asset, whatever that asset is. Okay. Real estate is an asset class. Stocks are an asset class. Cash is an asset class.
Yep.
So right now in the stock market, we have an unsustainable exponential increase in valuation. That's a bubble that is going to burst because the fundamentals don't support the prices. The Fed's involvement and the Treasury's involvement is what's supporting prices.
For sure.
Real estate's very different. Buyers have to be qualified and they're getting long-term debt.
Yeah.
What's driven up the median average price of houses across the country are the higher end markets like DC, like San Francisco, where you have very high income earners that are coming in and paying, $1 million to $2 million for an average house in certain areas.
Yeah.
That's skewing the average house price. That's not representative of everywhere in the market. There's still a lot of areas in the market where houses are under 300 grand.
Oh, yeah.
They're not exponentially increasing like some of these high demand areas like Silicon Valley, like DC, like Manhattan. So those are going to skew averages. So you got to keep that in mind. So, real estate prices, it's all cyclical. It's all based on interest rates. As the rates go up, the prices will come down. As rates go down, the prices, often go up. And people are, buying right now because it's, much cheaper for a lot of people to own than it is to rent, or their payment is much less as owning versus renting, which is creating, a movement with millennials into, buying homes that probably weren't thinking about it, 2, 3, 4 years ago.
Yeah, I just want to echo everything you've said because we agree on this topic. We agree 100%. There's a lot of channels out there today pointing at 2020 prices, right? The median price, and then they're showing the chart. Oh, look all the way back at 2008. We are above 2008 prices.
Absolutely.
Folks, it's not about prices, right? It is about the payment, right? And I go back to the one thing that saved us in the last crisis, and it was called the Affordability Index, right? It basically takes the average income for an area, and mine is produced because everybody always asks, California Association of Realtors, CAR. So my data, my experiences with California, but every big metro has an affordability index. Go look it up. So back in 2008, the affordability index in Fresno, California was below 20, which meant 1 in 5 people could afford the average home at the average price with the average income. And that's a problem. It was trending down, and it got as low as 16 or something because of funny lending, right? When you have an affordability index that low, you have bad lending because you just got to go create more buyers. That's how you get a bubble, for your example. Absolutely right. So let's talk about today, folks. The affordability index today in Fresno, it was 47 in January. And today in early September, so I don't know, late September, it was 50. It actually went up. How could that be? It's because interest rates are lower, right? It's the payment. So stop telling me about price being above 2008. Interest rates in 2008 were 6 and 7%. They're 2 3/4 today. Price is almost irrelevant. Now, this can run for a long time and become unaffordable. Absolutely. But there's a long way to go in lots of markets. So,
yeah, and there is pushback. So we are seeing pushback on prices. So what was happening 08 and 09, people were paying anything and everything because anybody could borrow.
Yep.
Nowadays, you have to qualify. It's based on your income, 30% of your household income towards, your mortgage and, insurance, taxes, all that. They look at that. They qualify you, and you have to have, you can't get these, 95% loans anymore. Everybody's got to put a down payment down. So, that's number one. And number two, with that interest rate and whole payment thing, in terms of the exponential growth in prices, people are pushing back. So even with cheap payments and all that, people still are getting to a point in certain areas where they're saying, I'm not paying more than X for a property. And when people are submitting bids, they're submitting a highest and best. So it's not continuing to exponentially grow. It stops at a point. And just think about cars, okay?
Yeah.
Cars are where they are now because of interest rates and extending, the loan cycle loan term out to reduce the payments.
Yep.
That's why cars are $70,000 to $100,000 now for a pickup truck or Suburban. 70 to 100 grand for the average pickup truck or Suburban loaded. Now you could probably get one for about 40 or 50 still. But I mean, back when I was buying, when I first bought my first vehicle, it was like 30 grand for a Ford pickup, So think about that. Now, have you seen vehicle prices double over, since 2008 and 9? Not really. They've gone up, but they haven't doubled.
Right.
Can they double from here? Not unless you draw the financing out to, 10 or 20 years, which we might see.
Yeah. Yeah.
And on the vehicles, the thing that kills me, I've got a Suburban now, and I tell you, you pay more for a vehicle, and this thing's got 130,000 miles on it, and I've got all kinds of stuff breaking because they're, buying the cheapest parts they can find to build these vehicles.
Wow.
My last Suburban was a 2005. I got 300,000 miles on it, or put 300,000 miles on it, had hardly any trouble with it.
Wow.
This one's brand new, 2016. I got 136,000 miles on it. Everything's breaking.
Time for a new truck. Hey, one of the things I want to talk about that you talked about in your examples of asset classes is cash. And it's funny, I just saw an interview it was on Graham Stephan's channel with Kevin OLeary, right, from Shark Tank fame. Mr. Wonderful, I think he goes by the nickname.
Yeah.
And I want to talk about one phrase that Kevin talked about in that video. And he acknowledged that he's sitting on a lot of cash because he's had a couple of exits from some commercial office buildings. And I want to talk about that because on one side, you have what I think for you and I've been pretty clear. I'm sitting on more cash than I ever had because I'm looking at the future going, I see deals into the future. And Kevin OLeary, again, Shark Tank fame, came out and said, you know what, I'm going to be sitting on all this cash for 3 years. He's just going to patiently wait it out. And, then you have other people like Ray Dalio coming out and say cash is trash. So I put that video out, I think it was Saturday, and I got all kinds of odd responses. Like, why would he do that? Why is Kevin OLeary's an idiot? Why does he want to sit on all that money? And I'm like, well, guys, he pays cash for stuff. He's going to wait for the market. He's going to wait for price discovery. Right now, people are jumping in early. So I wanted to hear what you thought. Are you on Kevin O'Leary's side where you're being conservative with cash and looking way into the future, meaning not next year, but potentially 2022 or 23? Or are you like Ray Dalio where you got to get rid of the cash as fast as possible?
So Ray is brilliant. One of the largest, if not the largest hedge fund, managers,
Yep.
hedge fund managers in the world.
Yep. Bridgewater.
So you got to understand when he speaks, he's speaking for a purpose and a reason because he has an interest in what he's saying, right? So he can't make any money if you're holding on to cash. Understand that.
That's good point.
Understand number two, he's had his worst year ever this year. He's missed it completely.
Yeah.
Okay.
Good point.
Now, Warren Buffett, most successful investor ever, Charlie Munger, his partner, what are they sitting on? Cash. Okay. They've made a couple moves, but they're sitting on cash and they're doing it for a reason. And they've been the most successful investors in the history of the world of investing. Nobody else has even come close.
Yep.
Kevin O'Leary is extremely brilliant, smart guy, and he's sitting on cash. So for anybody who thinks cash is trash or that cash is going to devalue and king dollar is no longer going to reign, that doesn't add up either. That's like saying, the house market's going to lose 50% the next year. The US dollar is the world reserve currency. It is, and it always will be. The United States dollar is the safe haven of the world. When the rest of the world is falling apart, they pile into US assets and US dollars because we have the largest economy. And even with everything that's going on, at the end of the day, we have that constitution and we have the rule of law that reigns. Even with some of the little wild extreme things that are going on here and there, we have the most sophisticated system and the most free enterprise and commerce system in the world. And, we don't have corruption at the levels that you see in other countries.
Yeah.
There's political corruption for personal gain, but they're not stopping commerce from happening because of, different things. We can go out, you and me, and can start any kind of business we want tomorrow with nobody stopping us.
Absolutely.
You can't do that in a lot of other countries. So that is fundamentally the thing that you got to understand about the dollar. And we can't even create inflation. The Fed is trying to create inflation, and that hasn't happened since 2008 and 9. Even with all the liquidity, QE, and everything, we can't create inflation, okay? So until you see hyperinflation, the dollar really isn't going to lose any of its strength or any of its value or its place in the world. No other currency will replace the dollar because there is no free enterprise system like the United States. So whatever your beliefs are, good or bad, it is what it is. This is the only place in the world where you can carve your own path. That's not going to change no matter who is in charge of policy, no matter who the administration is. It hasn't since the beginning, and it's not going to, because that's what keeps us, a sovereign nation.
Yeah, there's a couple things that I wanted to point out here. First and foremost, Ray Dalio, again, there's two people that I see headlines out there that I'll read. One is Ray Dalio, the other is Warren Buffett. It's funny that you brought them both up. But yeah, Ray Dalio has a mission, right? Bridgewater Capital, as of, I think I read a July report, was still the largest hedge fund. He's had a couple of rough years. The last two have been his worst by far because he just missed it. But where I wanted to get to is I saw this quote the other day and I really liked it. And it's the fact that you can turn cash into anything, but you can't turn anything into cash.
Right.
Right. That you gotta say that to yourself a few times because, when you're Kevin O'Leary and you're sitting on, I'm going to assume tens of millions of dollars, if not more, he's like, dude, I'm a patient investor. And that is okay. What I really appreciate about Warren Buffett, Charlie Munger, what I'm going to assume in Kevin O'Leary is they're willing to wait patiently for the right opportunity because they know one will come by, right? I talk about it all the time. The deal of the decade comes around once a year. And they're just going to wait for that deal to come by and they're going to just take it off. That's what I think. So any thoughts on that quote? You could turn cash into anything, but you can't turn anything into cash.
Yeah, exactly. There's a lot of analogies you could use there with gold, for instance. Okay. Right now, you can't necessarily, well, I guess you can turn gold into cash, but you can't take gold to the grocery store and buy groceries. Right. And things like that. There are times when you can't turn real estate in cash.
Absolutely. Yeah.
You couldn't even give it away.
Yeah, I remember. Yeah.
And there's still some cities now. I don't mean to bang on Detroit, but there's some areas in Detroit where they still can't even give property away because it's more of a liability to own it than it is,
You're right.
that you can do anything with it. So, and that's what we are seeing right now with quantitative easing, what the Fed's doing. They can pump liquidity into the markets, but they can't create solvency.
Right.
So
There's a
it's
difference.
the same kind of concept. They can put, cash into the market, but they can't make a bad business good. Can't turn that into a cash generating machine. So I completely agree with that statement. And when you look at what Kevin's talking about, it's opportunistic, right? And I'm opportunistic. So when you're opportunistic and you have the ability to be patient, that's when you get the best deals, and another guy to watch is Sam Zell.
Yes.
Sam Zell's,
the grave dancer.
Right. Same thing. He's built his legacy on opportunistic deals and transactions by patiently waiting, a Warren Buffett approach, a Kevin OLeary approach. Ray Dalio makes his money moving money.
Yeah.
Okay. So if you're holding on to cash, you can't make any money.
Yeah. One more thing, folks, if you don't know who Sam Zell is, do yourself a favor, pick up his biography. I've read it. I actually forget what the title is, but Sam Zell, Zell. Be ready for quite the character. He is fun to watch. Then, the next topic I want to talk about as real estate guys, is what we're seeing in the last 24 hours about Donald Trump's taxes, specifically his federal taxes. And there seems to be a lot of great hubbub around, I think it's 10 out of the last 15 years, he's paid 0 federal income taxes. And I wanted to get your thoughts on it. We can go lots of different directions. I got to tell you, when I first saw the headline from the New York Times, I was like, no shit. I'm not surprised. He's a real estate guy. And under the tax code that was created long before him, those were the rules, right? Depreciation, cost segregation, I'm like accelerated depreciation, all these things that give real estate folks the ability to keep moving. I was like, I'm not shocked. I'm shocked he paid taxes 5 years. So I didn't know what you thought of that. And actually, I don't even know if you've seen it, but I thought I'd bring that up.
Yeah, I've seen the news and all that. So number one, and regardless of where you stand politically, either side of the aisle, number one, this is a report from the New York Times. And if you know anything about media, I haven't seen a tax return yet. I haven't seen any documentation or proof. All we've seen is somebody that wrote an article.
Yep.
You don't know what's true and what's not true. So that's number one.
True.
You can't believe everything you hear, especially the New York Times, a newspaper with 0 credibility. Okay. So they are totally,
they have an agenda.
Politically driven. They have their agenda. They are not reporting facts very often. They're just writing whatever. Now they may have the facts. I don't know, but they haven't produced it. With their report, they didn't show the documents.
Right.
Number one. So number two, yes, the tax code has been in place for a long time. And as a business owner, as a real estate investor, there's a lot of advantages in the tax code, and they're put there for a reason for, business owners and entrepreneurs to take advantage of. And there's a lot of ways, like a lot of people are criticizing, oh, he's lost money and all that. Well, he's showing losses. Doesn't always mean he's lost money. So there's lots of ways.
There's a subtle difference right there. Showing losses.
There's lots of ways to create losses with carry forwards and offsets and things like that are totally within the law and legal. Now, who created the tax code? Okay, well, Joe Biden and people like Joe Biden, Republican and Democrat, that have been in office for the last 20, 30, 40 years. And why did they create these tax incentives, these tax loopholes, these tax laws? Because they are being lobbied by special interests, big corporations that receive the benefit of these tax laws and these incentives in the tax code. And what does lobbying mean? Well, it means they take you out to dinner, they take you on fishing trips, they contribute to your campaign, and they build up favors that you have to repay, and you repay through the tax code. Why has the tax code never been fundamentally, reformed? Because of that reason. That's power. That's where the power comes from, is in the tax code. So it's big corporate America that and special interests that control what the Congress and Senate, what everybody does at the federal level through favors. Okay, that's how they control. That's how politicians receive favors, and that's how they get powers, through a lot of it through the tax code. Obviously there's a lot of other ways too, with giving out money and packing little things in these little bills that they do, and it's both sides of the aisle. They're all, but
they're all the same in my opinion. If you're a career politician, first off, we need term limits. Let's just say that. The fact that you could be a 40-year politician, never hold a real job, and become a multimillionaire, that there's something stinky in that equation. That has always bothered me. It's very annoying. Sorry, I just wanted to say that.
Well, a lot of them are in it for personal gain. Some might start out whatever, but a lot of them are in it because it's power, it's control, it's personal gain. And, and that's where a lot of it comes from, is that tax code. So that's why they won't abolish it, get rid of it, and institute a new fair tax system where everybody pays their fair share. And there's a lot of different discussions and debates on how that works: fair tax, consumption tax, flat tax. However, I'm not smart enough to solve all the problems. I just know that if you get rid of the tax code, then everybody will pay their fair share. And if for the people that are under the poverty level or low income, middle class, well, then you give rebates, okay? Because you can track incomes. Yeah. People can pay on consumption or even a flat tax or however that works, and it can be balanced out to where it's fair and everybody pays their fair share according to what they spend. Yep. And people that earn more money do spend more money. Yeah. Period. Look at Donald Trump's taxes. He's got apparently a $75,000 tax deduction for haircuts. So he's
wow. Money, I didn't see that one. That's a hell of a haircut, man.
Well, that they're calling it haircuts, and it has to do with the Apprentice TV show. So when you think about what does that really mean and what is it really that he did? Okay, well, if you're doing a TV show and your wardrobe and your makeup and your hairstyling is part of the show, that's deductible. Absolutely. It is part of the tax code, because it's related to the business. So the question is going to become, what are these things really? What does it really look like? And he's being audited. So at the end of the day, he's either going to owe, and he's going to get hit with penalties and interest and all that, or he's not. Yeah. So, that's what's so interesting about all this. But again, it's everybody who's been in office long before Donald Trump that created these tax laws that everybody in the country at the corporate level, real estate investors, entrepreneurs, all take advantage of, including you and me, because that's where that's what you do. And we pay accountants a lot of money, and tax attorneys. I have a tax attorney and an accountant that I spend a lot of money to help maximize the use of the tax code.
The legal, I will pay as much as I'm legally required, and happy to do it.
Yeah. But now, also, 401ks, IRAs, things like that are also tax incentives, tax loopholes for the average Americans. Yep. And those were created for a reason, so that you could save for your retirement without paying taxes and all that kind of stuff. So it's not just the deductions, it's also the incentives, for retirement, things like that. So there's a lot of different things around this that were all put in place by these career politicians. The key is to, ask Joe Biden, well, wait a minute, if this tax, situation is such a bad thing, why didn't you get rid of it before? Yeah. You've been in office 20 years.
You've had 47 years to get rid of it.
47 years. Why haven't you done anything about it before today? And by the way, what does your tax returns look like? I'm sure you've taken advantage of some business deductions and,
I'm sure,
loopholes in the tax code as well.
So I want to get into a couple of very specific questions, because people just need to hear this. First and foremost, I don't know about you, but I will say I was not surprised that he didn't pay any federal taxes. Were you shocked that he paid zero?
No, I mean,
because there's lots of ways.
Some of the biggest corporations in the country don't. In the world don't.
Amazon, Amazon made billions and billions of dollars and paid zero. So it's the same idea, right? And again, the tax code was created long before he is in office. It is definitely skewed towards, I'll call it real estate developers as a broad category. And I mean, I've had my taxes greatly reduced after I left my W-2 job, right? Because when you're a W-2 employee, there's this thing's called, I forget what it's called now, but basically if I made X amount of dollars, I couldn't take my losses. So I had to do a carry forward, right? Guess what? I don't have a W-2 job for the last 3 years. My taxes have been greatly affected by depreciation and carry forward loss and cost segregation and,
and see, that's the fundamental problem that needs to be solved, is that the average employee that's going to work, which I used to be, is paying the most percentage of tax to income than anybody else. And Donald Trump has said it for years. My secretary pays more tax than I do. I mean, Warren Buffett says that. Absolutely. His secretary. Even Warren Buffett. Everybody that has a business takes advantage of the tax code. Well, we don't take advantage. You just use the tax code.
Yeah, use the tax code. It's
that's why it's there. And the reason is because it spurs investment to create jobs and economy that creates tax revenue. Yeah. But it is very unfortunate that there is no way for the average employee to take advantage of the tax code in any way other than to have a business, which I always tell everybody, look, you need a business so you can run some expenses through your business and reduce your taxable income a little bit. But, you know.
Yeah. The other thing that I think that I see in this hubbub is I do expect this, because again, we're so close to an election. It's just, that's where we are on the calendar. If there's a change in the executive branch, November 3rd, I suspect that real estate will become something that is beat on next year because we need some more taxes. So I'm imagining a unfriendly Congress and unfriendly IRS, or whatever you want to call it. I expect some of those loopholes, as some people will call them, to be closed next year. Is that just a real estate guy being concerned, or could you see the dominoes falling that direction?
Well, there's not a whole lot they can do on the federal level other than, accelerated depreciation, the home ownership tax deduction, things like that they could go after. But I think it's going to be more on a state, local level where, real estate taxes are going to increase exponentially. But yeah, it'll be interesting to see if they try to do anything in the tax code to eliminate, any kind of incentives. Because again, the people that are making laws that have been in office forever are getting paid to keep the tax code where it's at. They're being lobbied. Yeah. So I don't know that, and again, unless they control, both sides, House and Senate, and the presidency, one party or the other, right. You can't just push stuff through, that you want in any way that you want. And hopefully we don't see it one-sided one way or the other. The whole purpose of government is to have those checks and balances and have healthy debate, right, so that the best ideas get put forward and the best policies, versus what everybody's getting paid to do by special interests and big corporations. And unfortunately, that's a lot of the way it's been.
Yeah. The other thing I wanted to mention is there's no question that in this example, Donald Trump's, he paid lots of taxes. I bet you his property tax bill was tens, if not hundreds of millions of dollars. Right? All the stuff he owns. I mean, people that say he's not paying his fair share, I guarantee you the property tax bill and all those golf courses all around the world and office and all of that, there's huge, huge taxes he's paid.
Yeah. And this isn't a, defend Trump or anything like that, because the dude has zero moral character. He's like zero.
Yeah. Yeah. Can that go negative? I mean, I don't know. Yeah. Yeah. There's zero moral character there.
So This isn't a pro-Trump thing. This is just,
real estate.
Yeah. We're talking real estate. We're talking taxes, and we're talking tax code. And a lot of people take advantage of it now. Personally, I don't like Donald Trump's character at all. And, I'm a conservative, been a Republican my whole life, not traditional Republican values, just conservative. I'm all about free enterprise. Yep. You get out there and you take risk, and you should be able to earn what you can earn and not be limited. And what you make should not be taken from you and given to somebody else. Now there's taxes, and I agree with paying taxes and all that. We need, all the things that we need, but I believe in limited government. I believe in, free enterprise. I believe in individualism, that you should be able to get out there and believe what you want and live how you want and do what you want, as long as you're within the laws of the land and you're not hurting anybody else and those types of things. But you should be able to make whatever you want to make and give whatever you want to give and earn whatever you want to earn.
Yeah.
And create and do all that versus being told what you can do and being limited and things like that. And I think most people fundamentally agree with that. There's others that say, that we should be redistributing wealth and all that, but it's usually not theirs.
Yeah, exactly. It's not their wealth
that they're wanting to see that happen with. They're like, well, not mine, but everybody else.
Yeah, exactly. Not here. Yeah. The other thing I forgot about, I wanted to ask you about Kevin OLeary, is this time frame. This is, again, sorry to jump back to a topic, folks, but back to Kevin OLeary's kind of timeline. He says, I'm going to be sitting on cash for up to 3 years. I don't know. I guess I wasn't surprised by that, but as a businessman yourself, Greg, are you looking out that far for opportunities coming, or how far do you think they're out there?
I'm deal to deal. And I'm sure Kevin's the same way. If you brought him the right deal, he would jump, So I don't understand a time frame, because nobody knows. None of us have a crystal ball. We're still in the middle of the pandemic. We don't know what that's going to do going into the fall and winter. All the health officials are saying it's going to get worse and create potentially more shutdowns and more, if not that, people staying home, just not wanting to get out there. If it does get bad. And, I saw something today that, somebody, Cushman and Wakefield, or one of them, CB Richard Ellis, is saying that the office sector is going to recover fully in 2025.
2025. Well, I saw the same article.
How do you know that? I mean, how can you say that? Nobody knows. Nobody knows what's going to happen. what I can tell you is that if you live in a high-rise building and there's one elevator, you're
Ugh.
not going to want to wait an hour or 30 minutes or whatever for everybody to get up and down so you're the only one in there, you
Yeah.
know, those types of things. So there's a lot of things going on right now that can fundamentally shape real estate, shape, the markets, shape the economy, things like that with the
That's true.
election cycle,
Yeah.
all that stuff. So again, I'm opportunistic. I'm market agnostic. I am asset agnostic. It's what is a good deal? Bring
Yeah.
me the deal, and then let's make the decision based on that. And now you have to take into context everything that we've seen that could happen. Pandemic. 2008, the pandemic. What's going on now? I mean, there's a lot of factors now evaluating a deal or an opportunity, so that what's economic Armageddon proof, what's pandemic proof, what's Amazon proof, what's e-commerce proof. So you have to think about all these things now when you're making these decisions. So I think for Kevin, he's probably thinking there's going to be a change in administration,
Mm-hmm.
which could potentially change some things.
Yeah.
So he probably wants to wait in terms of a big movement of cash to see what that regulatory environment, what the administration, if there is a change, is going to look like.
Yeah.
If Trump stays in there, we can kind of understand what we're going to be seeing. But if if Biden and Harris jump in, we're not sure.
Yeah.
We kind of know where things were with Obama and Biden, and that wasn't extremely bad. Obamacare, whatever you think of that, has not been a good thing if you look at where health insurance costs are,
Mm-hmm.
and the other things that came out of it. It was very destructive to the health insurance markets and the healthcare system in general.
Mm-hmm.
What we need is to be able to cross state lines and get
Yeah.
competition in there to drop health insurance premiums. But existing conditions are definitely something that need to stay. But that's a whole different discussion
Yeah.
in terms of that. But timeframes are going to be very difficult. There's so much up in the air right now.
Yeah.
Until you
I
get
think,
past the election, know what we're looking at, and
yeah.
then see where this pandemic's going. Those two
Yeah.
things need to be put to bed before I think significant movements of capital
Yeah.
can be
I
justified.
like how you walked that through. So I think you're absolutely right. If the right deal came along to Kevin OLeary, he would do the deal. There's no question. But what I think he was trying to say, right? It's in a YouTube clip, right? So it's a soundbite. I think what he
Mm-hmm.
was basically saying is he's going to be patient. I think that's
Mm-hmm.
really what he is saying. And again, I get a lot of comments on this channel where people are like almost acting like the money is burning a hole in their pocket. They want to put it to work so fast because they've heard cash is trash, or they almost want to get rid of it. So I think what Kevin OLeary is saying is, no, I'm gonna wait for the right opportunity. I think that's really what he was saying.
I've been patient my whole career, and I've always been, anxious to deploy capital, didn't want to miss out on deals, but I've always been patient. So that's a very interesting dichotomy there.
Yeah.
And the older I get, the more patient I am, and I'm able to be, because, granted, I'm only 53, but
Yeah.
I've been doing this since 1997, self-employed entrepreneurial journey, done what I've done, built what I've built. I don't want to see it go away in one stupid move, because
Yeah.
I don't want to miss out on a market move, or I don't want to miss out on this opportunity, So that comes with age a lot of times. The older you get, the more cautious you become and the more careful you are. But I've always been willing to wait, even when the best deal of, the deal of a lifetime comes along every day. And
Yeah.
even when I've seen the best deals, I've always been very patient to make sure I was making the right decision before I strike, because I do use a lot of cash,
Yeah.
so you want to make sure you're making the right moves.
I guess one question I'll ask you as we wrap up this great session. Do you see yourself putting any meaningful new cash to work the remainder of 2020? Just curious.
If the right thing came along, yes. But am I on a path and anxious to do that? Absolutely not. I would rather keep it, hold on to it, and sit on it,
Just wait
versus feeling like I have to do something. But if the right deal came along, sure.
Yeah. Okay. Very cool. Well, thank you very much. This was a great show, Greg. I appreciate you. Why don't you tell the folks where your YouTube channel is?
Yeah, so it's Greg Dickerson, the Greg Dickerson YouTube channel. Pretty easy to find. Just Greg Dickerson Real Estate, and you'll see me pop up. And yeah, I do watch your comments and read them, and I appreciate you guys commenting in. And if you want to hear us talk about something, or get into an argument or something, just let us know, and we'll pick two sides of something and go after it.
Absolutely. That'd be a lot of fun. Let's debate something, folks. Give us something to debate, and we'll purposely take opposite sides and see what happens. All right, Greg, take care of yourself. Have a wonderful day. All right.
All right. You too.
Thanks.